Okay. Okay, that should be good. Yeah. Apologies for the technical difficulties there, guys. But it is definitely not a fun day in the markets right now. Just want to go over a few things here. Oh, I think I know the reason why this sound wasn't working. I just got to close. Okay, that should be good. Yeah, I mean, here we go. I'm gonna share this thing right here, and it is definitely a brutal day in the stock markets. We have spies down 1.65%. Still looking decent, still above the 50-day moving average over there. The QQQs bounce off the 50-day moving average, which isn't. It is good to see that it bounced off of there, but we're still well under the 20-day moving average. IWM is the worst looking chart out of all of them. I'm not necessarily bullish small caps or specifically IWM in this case. There's a lot of regional banks and a lot of unprofitable biotech companies in here. So, personally, for me, I'm not exactly long any of the companies on there. The small caps that I am long, they tend to be more profitable businesses or businesses that are part of a thematic approach. But in this case, this index actually comprises a lot of non-profitable stuff. So that's definitely taking the brunt end of the force here. Actually, if we look at the KRE has a nasty day today as well, down about 1.28%, which is a pretty considerable drop. But we saw here with KRE that it did reject the 50-day moving averages back down here. But this overall is a bad looking chart because you have a 20-day below the 50-day. Luckily, everything is above the 200-day, but still, it is just brutal days out there. Brutal day. I mean, let me know like how you guys doing today. Are you guys holding up? Are you guys down a lot? I'm down a lot. I'm certainly down a lot. I'm not sitting over here loaded up to the guns and puts at the beginning of the market open. I'm a growth stock investor, so I do have a lot of growth in the portfolio, a lot of tech, and I'm feeling a little bit of the pain right now, and it's not fun. But to be honest, guys, that's all part of the game. I think that if you don't embrace the red days, you're really never going to have any green days, and you could get chopped up. So another thing, do I think it's going to go lower? I don't know. We will see. I mean, I was bullish over here, but I'm letting price really dictate the direction where the market is likely to headed. Right now, it's not looking so great. We had multiple attempts to stay above the 20-day moving average. We could not stay above there, and we're down on a pretty nasty day. If we look at the weekly calendar, the weekly candle here, we had the massive bearish engulfing candle from last week, and this week we're having a bit of continuation here to the downside. And I mean, we could have like a strong like 2% update tomorrow, but I'm not sitting in like YOLO calls hoping for that to happen. But if we do look like a little bit, if we do look a little bit under the hood here at some other stuff, crypto is below 100K. It's cleanly below 100K. It's not bouncing materially. It has been leading the way down, as you can see, since a massive liquidation event when Trump was having the tantrum with China through the tweets. Ethereum is below the 200-day moving average. Again, this isn't exactly going to cope well for BMNR, which is down about 8% today. I am out of my BMNR position. I know I'm in and out. I know I'm in and out BMNR, guys, but like this is strictly a trade for me. And trades have stop losses. And the winner, I would say, in all this is probably premium sellers and also carries day capital. I gotta be honest, when we were up here, Ethereum looked hella bullish, and now they're sitting pretty nicely. I don't know if they still have their positions or not. They might have closed their positions, might have not closed their positions, but we'll see. So that is the current state of the markets from a technical perspective. I mean, obviously there are commodities as well. So if I go over here to the commodities, we're seeing that gold is somewhat weak today. So this is pretty much a broad market sell-off. I wouldn't say this is like a flight to safety. Silver is down a lot today. Oil is up, but I would still attribute this to just the technical bounce. Nat gas has been doing pretty nicely lately. So people who are in VG saw a little bit of a bounce lately. Also, any other nat gas plays. If we go to the rates, We could see that rates are up all across the board. TLT is down pretty nasty today. And I would say that a lot of that really has to do with, and this is also the IWM small cap straight here too, is that now you have a 50% chance that we're going to get a rate cut. And 1 month ago, we had almost 100% chance of a rate cut in December. So the market is pricing out a rate cut that we all banked on and that basically the Fed told us was going to happen or most probably going to happen. And now it's not going to happen. And the market's like kind of hesitant, like, wait, if we don't get a rate cut, then that means that the Fed is hesitant on cutting rates. That means inflation might be a little bit of a scare. That means employment might not be as bad as expected, whatever that may be. But you need lower rates to basically ease off the economy from the tighter monetary conditions that we're having today. I mean, we're certainly not at 5.5% interest rates, but I would say that we're still in a somewhat tight monetary cycle right now. We're still not in a loose monetary environment. A little bit more loose than we were before, but around 4 to 4.25. Actually, no, I think we're at three. Actually, that's not. I wouldn't say that's super. That's a super tight economy. I would say that it is looser for sure, but like we need to get down below the 3% range in order to have like maximum easing policy. And we're quite a bit from there. So I remain bullish long term. Just in the short term, just like these charts just look horrendous for some of these companies. Again, we're getting a little bit of a bounce today. Maybe we might bounce tomorrow, but we need to do a bit more work in terms of indices here. Moving on to the next portion. I know some of you guys are here to see me talk about it. I actually wanted to just bring up something here real quick. Just take a note for myself. Oh, we're getting a little bit of a bounce in Iran and Nebius and ciphers. One sec, guys. I'm going to take a little bit of timestamps here so that way I can easily log it. All right. So we got about 8 minutes and 10 seconds. Okay. So what we're looking at over here for a lot of the data center plays, let me actually go to the bigger watch list here. We could see that these companies are definitely not having a good last couple of weeks. We had some of it a bounce. Actually, no, this is the CoreWeave chart. We had a little bit of bounce in CoreWeave in late October, but it's been in a massive downtrend. So CoreWeave is down pretty far from its all-time highs, about a 57% haircut from its all-time highs. Iran is down about 36% from its all-time highs. Nebius is down. Nebius is down about 34% from its all-time highs. And one thing that I've said for a while when it comes to these data center stocks is that, look, they have a long trajectory, okay? I believe that these three that I talked about, including Cypher, I believe that these stocks are going to be higher in a time period longer than today. And how long that time period is going to be, I mean, who knows where the market's going to be in a few months. But my perspective is that AI is not going to be ending anytime soon. And that while we have like this turbulence in the market right now, I think the long-term story for these still stay intact. And I think there's a little bit of fear in the markets. I do think that these stocks have run quite a good amount lately. And I was not a buyer up here, but I am a buyer down here. And a lot of you guys already know that my entry was like $24. So, I made the decision that I'm going to hold throughout this drawdown, but at the same time, I'm not going to add heavily to Nebius because it already is a big position. And Iran is like less than a 4% position, and my goal is to make it a 5% position. So am I going to load the boat and make it 5% today? Probably not. I think I don't want to try to guess where the bottom is. At the same time, I don't want to try to guess where the top is, right? But I certainly was not adding to Iron up here. And unfortunately, a lot of people did add up here. And the only thing is that in the short term, it might be an unfortunate scenario. But if you really do believe in this company, and if you really do believe in the long-term trajectory in data center and growth as much as I believe in it, not to say that you have to, that if I believe it, you should believe it. I believe everyone should do their own research to build your own conviction. And that's for a very good reason, is that it won't matter whether you buy at $46 or $45 in the long run. But the way that I manage my portfolio is that I don't like to just go all in at once. I like to ease a little bit in unless I find like a very strong asymmetric setup in which that case it would most likely be a trade than anything. In this case, this is less of a trade and more of a hold. So am I going to sell iron? No, I'm not going to sell iron. And I sized it correctly to a position where I'm comfortable if it does draw down further. And the same thing for Nebius and CoreWeave. I don't hold. I don't own CoreWeave, and at the moment, I'm not planning to own CoreWeave. I think I have a bit of. I have enough data center exposure and done a bit more research on my end, which I will continue to do research and provide that information to you guys. Of which companies I believe will be okay in the long run, or which companies I'm convicted will be okay in the long run. And for me, it could be CoreWeave, but that's just not for me. And I know a lot of people, including Jose, that have built a lot of strong conviction with CoreWeave, has done way more research. I got to be honest, way more research than I have on a lot of these other companies. And he knows this. He knows this entire sector probably a lot better than I do. But being that my portfolio is a bit more diverse in other industries, I do want to only pick a few stocks versus like the whole tool belt. Right. So that this is actually Jose's YouTube channel in case you guys want to check that one out, Jose Najarro. He has a lot of good content on there, and he goes much more into detail about these things and provide more analysis on like CoreWeave and whatever if you guys want to check that out. But for me, I don't think there's really much to say as far as today. I provided a lot of information. You want to check out the previous videos for content that I had provided in the past for that, or check out the other earnings calls that I had for Cypher, Nebius, and Iron. I mean, those were good earnings calls, and I kind of broke it down on X. That if you guys are checking on X, you can go ahead and check it out. If you're on the YouTube channel, check out my X page right there, x.com/samslot57. And if you're on Twitter, I put these out on YouTube, right? So if you want to access the recording, you can certainly go on YouTube and check those videos out. But with that being said, we are here for the NuBank earnings, and the market is going to close in about 13 minutes today. And who knows where the market's going to go close? And to be completely honest, who knows where the market's going to be tomorrow? I can't tell you that. No one else can tell you that. I would say from a probability perspective, it does look like that. We're getting a bit of a strong close here, which is a good sign to see. I would say that we've been having massive red days lately, and the VIX is actually at $20 or more. When the VIX is above $20, you're going to have massive swings in the market. Mostly because volatility is very high. There's a lot of traders in the market. And when a lot of stop losses trigger, a lot of algos managing large amounts of money sell. And then when those recover, they get back in, right? And this causes the massive swings in the market. And it causes big institutions to hedge their positions by buying puts on the S&P 500. And that causes the VIX to elevate. And that's the reason why you see massive volatility when the VIX is above 20, because there's just so much happening so quickly. If you are building a portfolio for 10 years plus, turn off your computer. This is all noise, okay? But if you want to get ample entries, you want to pick individual stocks and so on, then this is the place you want to be. And of course, you want to extend that research and supplement that research to a further degree. So you see all these stocks going lower like Iron and Cypher. I don't know. I don't know if they go lower or not. The only thing that I know is that IWM is below the 200-day move, is below most of the moving averages. QQQ or NASDAQ is heading toward the 50-day moving average, and SPY is the same thing. And what I can tell you from my experience and probability wise is that if we stay above the 50-day moving average, or if we go up from today, then it's likely we might hold somewhat of a bullish sentiment. But if we break those moving averages to the downside, then things can get a little hectic. So again, I can't tell you if a stock's going to go down lower or not. So we will see. Yeah, Nebius is holding pretty strongly. I would think that out of all these stocks, Nebius probably is the one that's sold off the most in the shortest period of time. So maybe the sellers are exhausted, maybe not. I added a little bit to Nebius, and I added a little bit to Iron this morning, and I actually sold my CleanSpark, my BMNR position this morning. Both small positions. BMNR was a trade, like I had mentioned, and I got out of it. And I didn't allocate all of the cash that I got from those proceeds into Nebius and Iron, but I allocated some. So I have a little bit of cash, but I also have hedges in play too, because I like to hedge against weak positions of portfolio. But I already mentioned on Twitter, and I don't want to go too hard to that one. Is NuBank going to beat today? Well, we'll see. We will honestly see if NuBank is going to beat today. That is the reason why we're here, to see if they're going to beat and how the market actually reacts to it. So we got about 9 minutes until the market close. What I want to do now is kind of get a little bit of coverage here on CNBC to see pretty much like what the folks are saying. Also, I don't know if anyone saw on Twitter yesterday, Michael Burry closed this fund. What does that mean? I don't know what it means, but wouldn't it be like really ironic if the market topped as soon as one of the biggest bears on social media and Wall Street gave up? Like, it seems a little too coincidental to happen, but I don't know. It was just like a random thought out there. Actually, let me bring up that tweet. We still got 9 more minutes over here. After we go over this, guys, we are going to we're gonna wait for the market close. We're gonna wait for the NuBank earnings to be released. And then after that, we're going to kind of run through the report a little bit. And then we're going to take a look at the DLocal and other emerging markets earnings that had happened recently. We had DLocal, C Limited, and Grab that reported. And I kind of want to kind of get a little bit of a sentiment or read from where I see emerging markets going from there as far as how these earnings reports go. But I can tell you from a high level that that C Limited, DLocal, and Grab, the market obviously was not impressed with the earnings, to which they sold off these stocks. We will see how NuBank reports today. I think they're going to do well. Actually, let's go over the Michael Burry stuff first, just so I don't get too distracted, because I know that was very big stuff from earlier. And then we're going to jump into the previous earnings for NuBank real quick. So I'm going to go ahead and share my screen. All right, so this is the Twitter, and hey guys, look, is it always like funny to see yourself as you're on? I mean, we're wearing the same shirt. That's crazy. So over here, all right. So yesterday, Michael Burry, he told everyone what his position was, and he also showed in this registration status that he terminated. Scion Capital Management. I forget the name. Asset Management, basically his fund. And I don't know how much they had AUM, but when I looked at Datarama, over here, when I looked at Datarama, then there it is. It says a portfolio value. Like, I don't even know if this is right. Actually, no, that's not right. That is the wrong one. That's an old one. Let me look up Scion. No, Burry. No, perfect. Datarama. I guess that was the one. So maybe Will Wisdom. Okay, I think this is the one. All right. So when we look at the total AUM of his hedge fund holdings, yeah, I think this is it. Okay, this is definitely not it. Anyways, I saw like more than $1 billion on here, and you know, there was obviously they were saying on CNBC that he had like $912,000 shorting certain stocks, and that wasn't the case. That's a notional value, which means the whole value of the puts that he has the right to short. He has the right to short basically a 10,000 shares, or that would be 1 million shares of 10,000. Okay, so then that would be 1 million shares of NVIDIA short at 110, and then short, I think it was 5 million shares of Palantir at $50. That in translation is what the put options are. He basically had like $18 million in puts. So if his fund really had more than $1 billion AUM, that is literally a 2% hedge. And Who knows how much his fund is, because they're basing the cost of his fund based on the notional value. But let's say hypothetically that his fund was like $100 million to be realistic. So he's short 20% in puts on these companies. The fact of the matter, though, is that it looks like here he closed his puts. And I took a look at the volume on some of these contracts. This was the one that he bought, or said that he bought with Palantir, and he said he bought 50,000. And if I go back here to September, which is before the 13F was reported, you could see the volume of all the contracts that he purchased over a period of time. And this actually adds to 50,000 or more. Over here on October 24, there were 32,000 in volume trade, and the next day was the delta. In my perspective, he bought the puts in September and sold them in October. And if you look over here, he basically broke even. Okay. If I look at NVIDIA, you see 10,000 contracts about volume here, and then 10,000 here. So he bought the puts for NVIDIA in September and then sold them in October. And he actually sold it for a loss. Okay, so Michael Burr is out, according to the data that he provided. And, well, let's see where that leaves the market after this. The market is closing pretty much near the lows of day. It would be very interesting because he did not close it until October. So October was back here, right? So technically we're trading around the same place we were trading in October, but he got very loud on Twitter in the last week. Very loud, right? And then we saw the termination effective November 10, which was back Monday, right? So he closed at probably the worst time possible, his fund. I don't know, all speculation, just trying to put like data together to see like what was happening there. But it appears to me that he gave up. And the moral of the story is, don't spend your whole life trying to short the market, because you're going to lose 90% of the time, because 90% of the time the market goes up. So why would you bet against the 90% of the time? Never really makes any sense, especially since he's been pretty much bearish since 2023, when the NASDAQ has basically doubled since then. All right. Someone said Webull is down 7%. Is it? Oh, wow. That is bad. A-Lab. Someone asked me, do I still hold A-Lab? I do not hold Astera Labs. I was a buyer of Astera Labs down here, probably from like up here. I started my position small, add, and I make my position very big over here. I trimmed a little bit here, and I sold the rest of the position above $200. Am I planning to add right now? No, I'm not planning to add right now. I think the way that the market works is that they run certain stocks all the way up, and then things cool off, and then maybe it'll be time to get in. But I don't think it's time to get back to Astera Labs. I'm pretty bullish more sectors in Astera Labs. Plus, Astera Labs has a concentration risk with NVIDIA. And while we were riding sky high, it was the best store in the world, but, had to take the trade off the table. So what else is going to happen? We're going to see in one more minute what's the market looking like here at the closing basically near the lows of day. IWM is near the lows of day. Nice. I want to see IWM go lower, just so that way the hedges will pay off, and I want to see my tech stocks go up. Data center stocks, what are we looking at here? Cypher is below $15, everyone. Cypher is below $15. If you were buying Cypher up here and you were very bullish Cypher, you have a fundamentally better company today in public knowledge than you did before at a much lower price, right? So if you had the plan of DCAing in, which I've told people a lot for a while, and you started up here, okay, then continue DCAing as usual, right? But if you went all in up here, I don't know what to say to you. I will never, ever tell anyone to go all in a company, ever. In fact, I never go all in a company. Max size is 15%. So anyways, let's get into the market actually closing. And we have, guys, I'm going to get better at this. I promise. I'm going to get a lot better at this. Amit is in the OG when it comes to doing live streams with such great precision and accuracy and strategy. I'm getting better at it. Trust me. All right. So we have I don't even think there's like a lot of earnings after hours. Let me actually open up my earnings chart over here. And again, I appreciate 43 of you guys for spending the time over here. Really appreciate that, guys. Again, if you're on Twitter, go ahead and check the YouTube channel. It's very easy for me to interact with you on YouTube versus Twitter, because Twitter I can't even respond to you unless I actually go on the platform itself. But let's take a look here. We're just waiting for the NuBank earnings. It looks like over here that the stock is essentially flat after hours. Hasn't really done a thing. Oh wow, Cisco actually is still up 4.5% today. It's actually pretty good considering how much the market is down today. And let's see here. Do we have the NuBank earnings out? Let me open up this sucker. Boom. Oh, thank you. You guys just saw me spill right in front of you all. Apologize. All right. Let me know if you guys see those earnings come out. All right. Do we have some price action? That's usually a pretty good teller whether the earnings came out or not. No, NuBank is fairly flat after hours. We don't really have the earnings after hours. Hey guys, what else is reporting after hours? I think earnings season is pretty much over. The software earnings season hasn't really started yet for the mid cap and small cap software stocks yet. And that usually starts a little bit off later, where you have like Rubrik, GitLab, and all those companies report. What do we have today? We have StubHub. Oh, Applied Materials is reporting today. Very interesting. So Applied Materials is actually one of the manufacturing companies for semiconductor stocks. Specifically, they provide applied materials. I'm not going to BS you. I keep forgetting exactly what this company does. I never owned it, never traded it, whatever. But they better report some good earnings if it means anything for the sentiment of semiconductors. It looks like they actually did report earnings here, just looking at the price movement after hours. Let's see if we can get a little bit of information as far as how that's going. Hold on a second. Didn't mean to show off Hulu real quick. I'm going to open it up on my side just so that way I'm not showing you my Hulu feed right now. I mean, if you want to see the Hulu feed, that's totally cool. I don't really watch streaming anymore. My wife usually does. So I don't know what stuff came up on over there, but I mean, she's watching like a lot. She's watching The Diplomat right now, and she's like in love with like a lot of those shows. Honestly, we both loved Homeland, Carrie Matheson, and if that show comes back, which it probably won't, I would love to watch it. She's actually on a new show lately, so I'm probably not going to check it out. I'm probably just going to buy stocks and research stocks. That's just what I do. So I want my CNBC. Let's get that sucker in over here. Hold on. Yeah, guys, give me a shout out if you see those NuBank earnings report. Bought 10 shares of IBM at $150. Oh, says dead money for 40. I don't know if that's a joke or not. I can't really tell. Let's see here. No, they did not report yet. All right. I'm going to pull this up.
Denies it, many investors still believe a nasty stock market draws the attention of more easing Fed behavioral future.
Nah, you know what? I don't really like this guy. This guy is like a perfect indicator of a bottom or a top, because like with his sentiment of like, when I still remember October 2023, and he essentially called the top for rates, and he's not panicking. So I don't know. Like when he doesn't panic, it's like it's probably the trend is probably to continue to this direction. It's probably going to go in. What will be the next catalyst for Nebius? Feels like they have to announce a hookup megawatts. So honestly, this is the problem, is that there really are not a lot of catalysts that the market is expecting for these companies, right? So you had the earnings come up, and yeah, they randomly announced these deals and stuff. Like, no one knows when these deals are going to come up. But we've seen, as far as sentiment goes, is that the market doesn't care about the deals anymore. In fact, I think the market is just bearish these stocks right now because the whole market's falling. But I think the market is fearful that this spending is getting a little egregious when it comes to how much money they're spending on data centers. When I say they, I'm talking about the hyperscalers. And if the hyperscalers pull back on their spending, they're going to make assumptions that these companies are not going to get money anymore. And there's an underlying fear also with the depreciation and whatever. I've talked about that ad nauseum in other videos, but I don't know if there's any other catalysts that are going to come up. So we'll see. No, he's not an idiot. I mean, he's on TV, so he has to have a great personality. And I don't know if it's a great personality, but he has to have the personality. That's why he appears on there all the time, because his personality brings eyes. NuBank is out. Guys, I got ADD or something, right? So I apologize. NuBank is out. Oh, yeah, actually, it might be out. It might be out. Let's see if my stock Titan is up here. No, I don't see it yet. I don't see it yet. Did you see it in Twitter? I think Nu would kill it. I hope they kill it, dude. I hope they kill it. NuBank is not a humongous position for me, guys. I've already taken off a lot of the trade in the 16s on it, but I have the company long term. I do believe in the company long term. I think that I don't want to be like one of those guys where I say I think the show's just getting started. But NuBank is one of the largest banks in Latin America, and they're only going to get bigger. Like it's basically going to be a JP Morgan of Latin America. It's not there yet because they don't have most of the money that's in those regions, but they have a large portion of the adult population, and as the population gets more to like their mid age and whatever, so with technology, and NuBank is the forefront of that. So let's no. I don't see it yet. Let's do a quick search on here. Appreciate you guys being on here, all 45 of you people. All right, so NuBank had a double beat, EPS of 16 cents, beat by 7 cents. Revenue of $4 billion was expected. They came in at $4.17 billion. Excellent. I can tell you right now, I don't know what the numbers are, but those net income margins, net interest margins, better expand, because if they don't, the stock's going to be down. Okay, it's up 3%. Maybe we got some good information when it comes to those net interest income margins. I'll explain a little bit more of that in a second. I don't see a press release here. I would love to see a press release. Do you guys see any press releases or anything? Oh, they cooking. They're cooking. They are cooking. No, I don't see any. I don't see any press releases yet. This is when I wish I had a Bloomberg, but I kind of wish I didn't have a Bloomberg, and I don't. So I'm kind of glad I don't have a Bloomberg. That thing is like 20K or more a year. This guy's amazing. You guys should follow Wolf of Harcourt Street. He provides excellent due diligence, and also Gab Growth too. Customer growth. No, that's a preview. My bad. That's a preview. I don't know if anyone has it yet, other than just the top line numbers and bottom line numbers. We are waiting. Let's see what AMAT came out with. Applied Materials beat by 3% and 2% top and bottom line. 2.17 cents, $2.17, $6.8 billion for the quarter. But those did contract, so maybe that's the reason why the stock is down. Applied Material revenue 4% up year over year. Why did the other thing say it was down 4% year over year? All right. Sometimes your brokerage feed has it right now. Oh yeah, you know what? Maybe yeah, I was literally about to click in that link. Okay, maybe you are legit. Sorry, I work in IT, so I'm like a little I'm a little skeptical whenever I see like a random link on there. All right, let me go ahead and check out their results page real quick. Oh, the financial statement section. I was wondering why that was there. Okay, cool. So let's see what we got here. So this is just gonna be the financial statement. Let's see if they got some good numbers on here. So looks like we are heading in the right direction here. Yep, basically 30% growth. What is the 4.172 divided by 2.943? No way. 41% year over year. Very nice. That's in US dollars too. So they've definitely have the tailwind when it comes to the currency. What else do we have here? Net income for the period. Cash balance, liabilities. I don't know if this statement's going to give what we want. Yeah, I want to see the charts. I don't want to go through this with you guys because they're like literally, you guys are going to get bored out of your mind. The charts usually tell a much better story, and Tanner's probably got all the spreadsheets happening there. Let's see if I can find the margin stuff. No. Yeah, I don't want to bother calculating this stuff if we're just going to see it in a few more minutes once they actually release it. How's the stock looking like? Okay, 3.5%, 3.5%. Let's not get ahead of ourselves, guys, because we've seen these moves just go the other way many times. So, like, it's good to see that's in the $16 range again. But I want to see like the real figures here, and I don't think it's available. Ooh, there we go. Presentation. All right. Revenues on Brazilian reals, 73% year over year. That actually is an acceleration. So that's really good to see. Average revenue per acquired customer went up 30%. Dude, look at this move. Like that's amazing. They went up by $2 in one freaking quarter. This stock's got to be going up. That's it, 3%. Come on. It was down more than 3% today. So it's essentially flat today. Customers, they have 83% of the customer activity percent ratio. So 83% of their customers are active, and that actually is staying above the 80% range, which is excellent to see. Gross margins grew 70%. So gross margins did contract a little bit according to here on an FX neutral basis. They became a lot more profitable. Always good to see. Efficiency ratio is going down. That's always good to see as well. Customers. Okay, let's get to the good stuff. Net interest margin. That is exactly what I think the market cares about the most. Okay, it contracted a little bit. Net interest margin contracted from 17.7 down to 73. Well, I don't know. Maybe they're going to explain that in the phone call, but the analysts are going to butcher them with that one. This number has been going down since Q2 2024, all the way up until last quarter where it went up, and that's the reason why it was up so much. But now that it went down again, that might be a little bit of a concern for analysts. Year over year, the net interest income actually went up 32%, which is good to see, and they hit a record net interest income. That is great to see, guys. In my opinion, it's still going up, okay? But they're gonna have to do some splaining, all right? Like Ricky Ricardo, they're gonna have some splaining to do. Credit losses and risk adjustment net interest. Okay, so this is adjusted for what are they adjusting it by? They're showing that it increased. They're going to comment on this in their earnings call, most likely. They're going to say the reason why it went down on a non-adjusted basis. CLA stands for risk adjusted net interest margin, is annualized and calculated by dividing the interest margin net of credit loss allowance by interest earnings assets defined as the following cash. Okay, so it looks like here the credit loss allowance is the reason why it went down. But when you adjust for it, it actually went up. Okay. So credit loss allowance should be going up in order to see this figure go up, but you don't want to see it come down. But after adjusting for it, it actually went up. But without adjusting for it, net interest margins went down. All right, let's see if it holds. I mean, I don't know. I've listened to all their earnings calls all the time, and when this figure comes down, they just get butchered with questions on the earnings call. Like it's like these analysts don't care about this. They just care about 40 basis points, which I guess makes sense from a short-term perspective, but I don't know, guys. Like, it's so hard for me to be bearish a company that's doing this or that's doing this, right? Or that's doing, well, That is really anything. That's doing this. Like, I don't know. Like, I don't want to be bearish that company, right? And the analysts can be critical about it, but it serves them right because they have clients to serve, which invest money with those analyst firms, or large firms pay them money, or sell side analysts, get paid based on what the short-term sentiment and breakdown is. And it matters to them. Actually, I think it is 15. So I got to do the timestamp again, guys. Just got to make sure the folks are going to be watching the recording. All right. So yeah, I'm sorry. It looks like a great quarter, high level, but like this is going to be a problem for the analysts. Like I could already see it. We'll see in the earnings call. We'll see it in the earnings call. And yeah, it looks like we'll see. It depends on what they say in the earnings call. If it's like a very good reason, and I don't want to like dig into it, they're going to say what it is in the earnings call. But I don't want to dig into it too much. We'll see. Oh, actually, look, after hours, the QQQs are actually up a decent amount. Okay, that's good. That's good to see. Let's see if we can get some information here from the NuBank earnings. One sec.
Round of cuts ever. It comes with a new CEO and increased competition for wireless phone and home internet services. Another standout in the sell-off today, healthcare. The sector is now closed higher. The defense is to put it in.
I don't see anything for NuBank. I'm just trying to search for some stuff if there's any like coverage on the NuBank earnings. I doubt it. This is like one of those stocks where like there's a lot of analysts covering it, but like when the market's down like 2% today, I think they want to they don't want to talk about NuBank. They want to talk about the stock market. Actually, it looks like over here that Disney reported earnings this morning. So let's see a little bit of what CNBC has to say about that one, because I was interested in seeing that.
On the pullback.
Yeah, and if you don't have it on the sidelines, it's rotating out of the defensives that.
Well, Disney is among the biggest drags on the Dow today as results fail to impress the street, with streaming unable to offset declines in linear TV revenue. Our Julia Borston joining me now in studio with more on Disney's results. Julia, how is it going?
Well, I think that there were some disappointments, particularly in the direct-to-consumer streaming business, as well as the parks business, falling short of analyst expectations. But I interviewed Hugh Johnston this morning on Squawk Box, and he talked about the fact that they're increasing their dividend, they're buying back more stock, and they're really optimistic over the long run, not just on parks, but also on the direct-to-consumer businesses paying off.
On the parks part, I'm particularly curious about that, because parks and then cruises, which they're gearing up, that's a lot of money. But how much of that is going to be domestic versus the international business really needing to continue to stay strong?
Well, you're right. They have 2 new cruise ships that are coming online, and Johnston said that even though they have this additional capacity, they're still booking at the same level. They're going to be able to fill those cruise ships. And he did note that bookings for the fiscal first quarter, that's this quarter right now, are up 3%. And he said Walt Disney World amount per spending per head was up 5% for the quarter. So they're seeing different areas of strength. And he said they do see momentum going into next year. But I think there's this question.
We have the Robinhood monthly metrics. I want to bring this one up. I'm a big Robinhood shareholder, so I do look forward to these numbers when they come out. I don't want the press release. Can I get the dashboard? Okay, here we go. So Robinhood monthly metrics for October came out, and total platform assets only grew by $1 billion. No, sorry, $10 billion. Sorry, excuse me. Which is good. Month over month, 3% up, 115%. I mean, the market's up more, so you're definitely going to have those assets go up more. Funded customers is probably the more important part. Wow, in 1 month, they actually grew. They grew by 300,000. Yeah, 300,000 customers in 1 month. That's amazing. Net deposits went down, but the annualized growth is 20%. So year over year, last 12 months, it was 43% growth in terms of net deposits, which is always good to see. So that's new money. That's new money. I think that's new money that's coming in. Net deposits includes results from Bitstamp, does not include results from trade. Okay, I believe net deposits is new money that's coming in. So Went down a little bit from last month. Probably as the market's going up, you're probably going to get that big throw. Actually, that's interesting. Maybe if we go down in the markets, maybe this net deposits will continue going up, which would be a good thing. Because I do notice here that when the market's down, people deposit more into Robinhood. Yeah, that'd be very interesting. Options metrics. Sorry, equity notional volumes. Wow, equity notional volumes was at its peak last month. That's actually really good. 34% month over month. That's either a lot of trading or a lot of buying. So that's always good to see. Options contracted traded was 267 million last month. Dude, their take rate in this is pretty good too. Margin book, people increased their margin last month. Oh, that must be the reason why the market's pretty hesitant right now. I wonder how this is going to turn out in November, because it's possible that margin book might actually decrease since the market might have took a little bit of a vacation for a minute. Crypto notional volume. Robinhood happened Bitstamp. So they were both up. That's good to see. You did see a bit of the crypto up movement in October. My assumption this is going to be down in November, so I wouldn't be like too bullish in this figure. But they do make money on it both sides, which is good to see. So, overall these metrics look good. Does it really change the story? Not really. I don't think this like makes me even more bullish or bearish or anything. This is just good execution, in my opinion. So anyways, let's see. NuBank is up 4% after hours, and the market is bouncing pretty considerably. That's good to see. All right, so let's go back to the coverage while we have there. I'm going to take a look at the DLocal earnings. And hold on a
It's
second.
the strategy that helped me win the portfolios with purpose investing competition,
Nope.
beating out some of the most.
No, I don't want to do that. Hold on a second here. Did we get any NuBank coverage? No, we didn't get a NuBank coverage. All right, so I think what we need to do is wait for the earnings call to get some more clarity on the net interest margin. But overall, though, they're probably going to ask about this 90-day non-performing loans bumped up by about 20 basis points. They're going to ask more about the risk on that one. The coverage ratio over total balance decreased, so they're probably going to ask about that one as well. Brazil actually went, let's see here, it went down for the 15 to 90 days. So I don't know if that's because people were paying it less, because you do see that differential here. And then it went up in 90 days. So maybe like the people who weren't paying it toward the tail end of the 90 days stopped paying. But I think we're going to get some more commentary as far as the credit portfolio goes for the risk in Brazil. Delivering sustained operating leverage. Again, NuBank is really good with managing basically their free cash flows, but also it's a bank. They know how much money they should be lending out and how much money they should be keeping in terms of deposits. When you deposit money into a bank, that becomes a liability for the bank, because the bank now owes you money. When they loan out money, that's considered credit. So it's supposed to offload the amount of money they have in their bank. And depending on how much risk there is in the credit markets, they basically say we should increase the amount of loans we put out there, or we should decrease the amount of loans they put out there. So again, we're going to get a little bit more into that. I need to look a bit more into that more and provide my synopsis later on after I look through the earnings. There was actually a chart that I wanted to see. I wanted to see their Colombian and Mexico growth. So NuBank is in Colombia and they're also in Mexico, and that's like the faster growing sectors that they have. And let's see if they broke that down here. Oh, wow. Did they not do it? I don't think I see it. They're only at 1% now. No, I still have a decent amount. Okay, here we go. So we have Brazil, the number of customers. Oh, wow, look at that thing. 105% CAGR on Mexico growth. 4 million to 13 million. So what is that? I think that's like up over 200%. So yeah, 225% growth in Mexico, which is a good thing to see. Do they have Colombia? Okay, so customers, and they got Colombia, Mexico. So now they have 60, they still have 61% of the adult population in Brazil. Now they have 14% in Mexico, and now they have 10% in Colombia, which is good to see. They don't have that big chart where they show like all of the countries anymore. They used to have it. They don't have it anymore. Interesting. Their total portfolio in their loan book increased slightly last quarter. Actually, the entire loan book increased 42% year over year. And this looks about even every single quarter. All right, let me see if fiscal.ai has it. It's only up 1%. You sure? No, I still see 2.5%. I still see 2.5% there. All right, so let's go ahead and check this guy out. I'm not sure if this is going to be updated here. We will see by quarter. No, we don't have it updated yet. We still have the June. So the reason why I brought this up is because I want to see the revenue broken down by different countries. And like I mentioned, they have Colombia, Brazil, and Mexico. And it looks like they're listing Colombia over here, the way they broke it down by geographies. But also, we're going to be able to get the number of customers growth by region. We could see here that Mexico last quarter is growing at 54%. Colombia was growing at 161%. Of course, law of large numbers, the biggest one isn't going to grow as crazy as the other ones. But, we do want to see this grow like mid to high double digits for Mexico, and we still want to see triple digits for Colombia. We don't want to see a drop off there. And the reason why is because it's very expensive to expand quickly in those countries. So we're going to want to see that return on there. But I do think that considering the average revenue per customer, it looks like it's working. All right. They don't have the average revenue, the average cost to acquire a customer on here, or maybe it's in here, but I haven't looked. Yeah, just see average revenue per acquired customer in here. I don't see it on there. Oh, the cost to serve. The cost to serve Brazil actually went up by 10 cents in Brazil, and it went down by 7 cents in Mexico. That's good to see, considering that Mexico grew 225%. So that means that they're scaling out successfully in Mexico. I don't know why they don't have Colombia here. Is it because they didn't want to put that on there because it's not good? I don't know. Just a little bit critical to find out. Oh, there, I see it. It's only at 1% now. 1.5%. All right, we'll see how that all gets digested after the earnings call. So, there's obviously a lot more to dig through in here, but I want to wait for the earnings call to see what the analysts ask about. They're most likely going to ask about the net interest margins contracting, and they always look past the adjusted figure. They want to know why there's like a blemish in the other ones. All right, so let's go over the DLocal earnings because I didn't get a good look at this one. And we can go over it together. I did release it the other day. Okay, so DLocal was actually down. Let's see where they are at today. They're in the 13s now. I believe they reported yesterday, right? So they were down like 10% yesterday after hours. So they did have a decent bounce over here. The chart wise is they need to get back above the 50-day and the 20-day in order to remain bullish. But with that set aside, let's look at the earnings itself. Someone said in the audience that the take rate is pretty important. The take rate is important when you think of transactions. So DLocal is not a bank. They're more of a payment processor and backend for it. So they're probably something more like, I don't even want to say they're more like a Square or a Block or anything. They more provide the backend transactions for a lot of these international foreign exchanges and transactions that basically go cross-country currency exchange, and they take a cut from it. So obviously, the more transactions that are done, the more money that they make by the take rate. And if I recall, the take rate went down. So just look at the high level metrics. They grew 52% year over year, which is great to see. They came in line with the EPS estimates. Transaction payment volume grew 59% year over year, which means that a lot of people are using them. Specifically, 59% in volume is being used more. They're becoming more profitable from a gross profit portion, but it looks like here gross margin did contract here because revenue grew faster than gross profit margin. On an adjusted basis, their adjusted EBITDA margin is 25%. On a net income basis, on a GAAP level, they are a profitable company, 18% profitability. So it's always good to see, and they got a bit of expansion here. So let's go ahead and take a look at the investor relations page and at the results. All right, so DLocal. If you guys don't know, Pedro Arnt used to be the CFO of Mercado Libre, and then he moved over to become the CEO of DLocal. And I still remember that because that's actually when I bought into the stock. But this stock used to trade in like the $20 range, and then it pulled back to like a $7 range when I was aggressively adding. And I have to be honest, I don't own DLocal anymore. I basically got out when I was in the 15s. And the reason why was because I was seeing more opportunity in Mercado Libre, and I was seeing more opportunity in NuBank. But still bullish DLocal. I'm not a fan of the chart right now. Fundamentals wise, I think it's still a great company to invest in, but you need to have a lot of patience with this company because their volatility when it comes to the sensitivity of the economy in Latin America, but also the emerging markets that are in, is going to hit this company. But I think the long-term story is still intact. All right, so another great quarter. We already went over these figures, which is good to see. Someone mentioned the take rate, and that's probably the reason why they were down. All right, net take rate impacted by number mix shifts. There you go. That's what it is. The take rate last quarter was 1.07%, and now it is 0.99%. And that is likely why you saw the stock sell. The market is so critical with this figure. And the reason why is because if this is trending down, it means the company, while they are still growing, their business is becoming less profitable from a sense of how they actually make their money. All right. I certainly don't think the company's going to be going down, but the market is pretty short-term thinking. Let's look at the investor relations, and let's see if not investor relations. Let's look at this site and see if we can have the take rate on here. No, they don't have the take rate on here. I don't think I see the take rate anywhere else on here, but this is probably the most important figure when it comes to DLocal. I mean, as far as that goes, if you scroll up to these other slides over here, you can see that the revenues from Latin America, which is most of where their revenue comes in. They're also expanding to Africa and Asia, or they already are expanding to Africa and Asia. So that would be Egypt. I believe that would be Zimbabwe as well. Yeah, so they got more than a few countries over here. Yeah, so I think this is Zimbabwe. I'm pretty sure this is Zimbabwe. And I forget, is that Singapore, Malaysia? No, it's not Malaysia. What country is that? I forget exactly which country it is. But I mean, this is a much smaller area. So you think of Egypt, and then you think of Zimbabwe, and you think of some of these Asian countries, and then they're going to be adding this one too. I apologize if that happens to be the flag of your country. I don't know these flags by heart, but I'm just looking at it from a regional basis. They are growing in these regions, right? So you could see here that cross-border payments is where they do make a lot of money over here. And the volumes are increasing 59% across the board for each one of them. They kind of break it down over here for pay-ins, payouts, and cross-border. But you could see over here, though, that Africa and Asia is not it was not as favorable last quarter, but if you look at it from a year-over-year perspective to exclude seasonality, it still grew 52% as a whole. But it says here that Africa and Asia contracted 10% quarter over quarter, and Africa and Asia grew 19% year over year. I think this was the criticism that I had in this company a while ago, is that, look, guys, get out of these other regions. Just focus on Latin America. Latin America grew 16% quarter over quarter and grew 61% year over year. Asia and Africa contracted 10% quarter over quarter and grew 19% year over year. Is this where they should be focusing their efforts on? Even from a gross profitability standpoint, everything contracted for Africa and Asia, but it grew for Latin America. And I think this is a criticism that Wall Street has for this company, is that don't focus on your weaknesses if your weaknesses are not getting stronger. Focus on your strengths because your strengths are getting stronger, right? So that's what you want to focus on. That's probably the criticism. And if you look at this, Egypt gross profit contracted 44% quarter over quarter. Obviously, it's not green across the board. Africa and Asia grew 16% year over 60%, 41% year over year, gross profit quarter over quarter. Okay, 60% quarter over quarter. So then why was that? Was it really Egypt that brought it down? Africa and Asia contracted 14% and 4%. But if I look over here, it says 16%. I'm not sure why that's the case. Again, I don't think Egypt is working out for them because I've never seen really good numbers come from Egypt before. And I guess Zimbabwe is included in here in Africa and Asia, even though Egypt is located in Africa. But we'll see. Where's NuBank after hours? Yeah, still up 1% after hours. All right, so we're gonna wait for the earnings call for NuBank. We already went over DLocal. Let's go over C Limited. Let's go through that real quick. 236. All right, so yeah. Would I add to DLocal? No, I'm. Would I add to it? It's not what I'm focusing on right now. I'm focusing more on data center and themes, the leaders when it comes to a lot of the ex-US or emerging markets, and that is Grab, that is NuBank, and that is Mercado Libre. And I'm strategic with certain companies when I add to it. One company that I've been looking at is C Limited, because it was still a good quarter, but I think, and this is the reason why I don't think DLocal should focus in on these regions, even though they don't necessarily overlap with the business models of Grab and C Limited in Asia. There's a lot of competition out there, and they're obviously doing very well in Latin America. So why reach out to regions when you still need to build out the infrastructure and grow bigger, which they are in Latin America? I don't know. I think that was always the big criticism when it comes to DLocal. I mean, as far as that, like, look, Pedro Arnt is a great CEO. I mean, the company is still profitable. They're still growing, which is great to see. The other thing is I think they're focusing too much efforts on regions outside of Latin America, which is where they're home based. So we will see what happens with that one. We're going to get a little bit into C Limited, not too much though. I believe the NuBank earnings call is... what time? I think it's at 2:00, right? Please don't tell me it's right now. Let's see here. Earnings call. Yeah, it's going to be in 20 minutes, so we still got a little bit of time. I'm going to see if there's some coverage, and I'm going to set up the earnings call situation.
No can do.
I'll get out there.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
I have chick ducts for fusion metastatic sarcoma.
Well, wait.
Childhood
what is
cancers are a heartbreaking reality.
20% of
Hold
these
on.
children will not survive.
There are many different kinds of childhood cancer, and in general, quite underfunded.
With future cuts looming.
Oh my goodness, it's going through a commercial right now. Here we go.
Hours to fill the gap.
Okay, I got this stupid thing is over. Dude, why do I pay Hulu money to see stupid ads? I don't know. What is going on here? Anyways, there was breaking news here that Trump announced a trade. So I'm going to try to open that up over here real quick. One sec. Oh, so
PM
annoying.
EST today.
There we go.
Do you care where the economy is headed? What about elections? Change. See the forecast consensus on our future at IBKR Forecast Trader. If you disagree, you can buy the contract that looks undervalued.
I have to go through this ad. My guy, get out of here. All right, I'm going to wait for this thing to end. In the meantime, C Limited. This was honestly a company I should have stayed invested in and didn't. Unfortunately, I sold around $100 after making a small gain on it. Problem with trading is that you get out of positions. Luckily, I have positions that are my core positions, which I don't sell out of, and those actually went up a lot more, fortunately. But C Limited, they have three different sectors. Okay, so they have e-commerce, which is somewhat competitive with Amazon and Mercado Libre e-commerce. They have digital finances, which is competitive with Mercado Libre's Mercado Pago and a segment from NuBank, but not directly in this region. But just trying to give you an idea of like what this business segment's about. And they have digital bookings, entertainment bookings, which I need to look more into. I believe this is their gaming sector. And that one's growing pretty considerably. I mean, when I look at these numbers across the board, like this is actually a really good quarter. I don't know what the issue was with this quarter, but maybe it was this. Net income went down while revenue went up, which means that they became less profitable. And the market hates that. Operating income went down while revenue went up. So there was probably a large cost that they had to account for last quarter that hit them pretty hard this quarter. And the market never likes that stuff. It never, ever, ever liked that. Hold on. This commercial break's almost over. EPS miss, huge revenue beat. Yeah, I mean, in my opinion, it's never really about like the quarter that just happened. So while I might have pointed that out, it's more about the quarters ahead. Did they provide guidance? I don't know. I think they did report on that one, but I wanted to bring up this breaking news as soon as this stupid ad is over. All right, here we go. So, okay, here we go. All right, I'm just going to do this real quick.
Ownership group since 2012 when they purchased it from John Moores. And our folks at CNBC Sports say it's valued at about $2.1 billion, making it the 16th most valuable baseball team.
Still a lot. Bertha Coombs, thank you. Got some breaking news out of Washington. The White House announcing progress on trade talks with several countries. Our Eamon Javers has the story. Eamon?
John, that's right. The White House posting these details just within the past few moments on their website. We expect to get some more details here in just a couple of minutes' time from White House officials. But what I can tell you is they're posting trade agreements with Argentina, Guatemala.
Okay, sorry. I don't think anyone really cares about those countries. Not saying that it's not important, but the market's looking for China and EU. All right, so did they provide guidance for the quarter. GMV, yeah, this was interesting price movement because they like recovered everything after the earnings, and then they came back down, and now it's below the 200-day moving average. So if I'm buying a company that's below all the moving averages, I better be very convicted of this company, right? Because below the 200-day moving average can get very nasty. C Limited didn't even, it tested the 200-day moving average last April, and it bounced. It tested the 200-day moving average in August of 2024, and it bounced. It hasn't been below the 200-day moving average, like meaningfully below the 200-day moving average since February of 2024. This is the first time that it's below the 200-day moving average. And then you have the 20-day going below the 200-day, and then you have the 50-day curling down. So the short and medium term trend is broken. And then the other trend is going to break. But if the 50-day and the 20-day go below the 200-day, that is a very bad chart to look at. If I'm going to buy there, I better have very strong conviction about the company. So I'm going to wait. I'm going to do more research on it, but there's other companies I want to do research on. So I don't want to dive into that one too heavily. Aside from the technicals, let's take a look at the metrics over here. So they grew 38.3% last quarter, and their EPS was 59 cents. So they missed by about 28 cents. And their margins was 43.4%. Net income margins was 6.3%. Segments grew 30% or more last quarter. GMV grew less, which means that they're taking more market share. That's always good to see. E-commerce orders grew 9.1%. Bookings for gaming, 51.1%. I mean, this doesn't even look like a bad quarter, in my opinion. I mean, their entire, if I look at over here, I mean, you want like a really good picture of how a company's doing. Well, let's see their largest segments in their business. And this is in millions. So they have 4.29. They have over $4 billion in revenue in the e-commerce segment, which is their largest segment. And it's still growing at 30% or more. So what's wrong? What exactly is wrong there? Their e-commerce operating income is still green, but this is probably what the market's scared about. They saw a flip from last quarter. They got a little scared. And then they saw this and just like, I'm bouncing, right? So I still remember the prices around here. C Limited was like in $30, $50, and then it made a huge comeback. And could this be the beginning of a trend reversal? I don't know. I'd have to look into it and find out. So, that is where I need to really know exactly what's happening in order to buy into a company. All right. So we have about 10 more minutes till the NuBank earnings. I think we got a little bit of time to go through some metrics here. Let me actually see something here. I want to go through. Same situation with Melly. I mean, I can't be bearish Mercado Libre. I just can't, because this thesis is going to play out just the way Amazon did. And right now the company's worth $100 billion. Latin America is only getting bigger. This is going to be a $1 trillion company. Probably not in the next few years, probably not even in 10 years, maybe a couple of decades. That's a 10 bagger right there. And the reason why I'm so convicted about that is because they're expanding in Latin America. They have phenomenal management. I think they had a shift in management recently, which is still okay. They pretty much are the Amazon of Latin America. They're getting into robotics, which is going to help with their efficiency. On top of that, they basically already built out their entire logistics network somewhat the same way Amazon did in 2021. And again, they're only going to grow more. and they're becoming a banking. They're going to start a bank in Argentina because they applied for an Argentinian banking license. I will buy the dip in Mercado Libre. Would I go all in? Probably not. I'm not going to go all in Mercado Libre, but it's a good amount of portfolio. I think it's like 6 or 7% of portfolio, and I do like little tranches to it where I add to it. I did add to it recently. Haven't added to it since. It was actually, I think I added to it a little bit over here, so haven't added to it since. But yeah, if the market's going down, this sucker's going to go down, like just without a doubt, guys. Like growth stocks drop when the market drops. That happens almost every single time. And if it doesn't, and the market continues going down, they usually catch up. So, it's just when you're in growth stocks, like all these stocks that I talk about, they are all growth stocks. Nebius, Iron, and data center are like hyper growth stocks, right? So when the market's weak, like today, these stocks get hit the most, right? So if you want to invest in like dividend stocks and whatever, then you're not going to reap the massive upside that happens in raging bull markets. You're going to lag, but you're certainly not going to lose as much money in corrections or pullbacks as we do for some of these companies like Philip Morris. Philip Morris is down 26 basis points today. Mercado Libre is down 3.5% today. Philip Morris is a giant, a $241 billion company. Mercado Libre is a $100 billion company, but Philip Morris is not growing at 20% to 30% year over year. They're growing steadily and they're paying out a lot of money into dividends, right? So like that's your safety right there. That is your safety. When you want to have steady income over the long term, maybe this is a bad example. Philip Morris is a cigarette company. I'm trying to think. MMM. Okay, so 3M. 3M is a dividend stock. It's a safety stock. And this is something you don't own for a trade. This is, well, maybe some people do, but this is something you just own for a long term for the dividend. But you could have been buying in 2023 and reap the upside and probably not sell, and then also SCHD is the ETF for high dividend companies. And this has been a steady compounder, right? These are the companies you want to buy when you just want to like a set it and forget it and like steady income portfolio, right? Like you don't do that with Mercado Libre. You're buying Mercado Libre for the appreciation and the growth. You're not buying Mercado Libre for its dividend. In fact, it doesn't even have a dividend. And I don't think they will. I hope they don't have a dividend. That'll be a very bad. It's like Amazon too. Like you're not buying Amazon for a dividend. You're buying Amazon because it is the largest hyperscale in the world. It's the largest e-commerce company in the world. And they have ads, they have robotics, they have everything. And then now they're freaking launching, they have ventures and stuff. They're part of Rivian. They have all this stuff. That's why you own Amazon. You don't own Amazon for the dividend because they don't have a dividend. You also don't own Google for dividend, and you don't own Meta for the dividend. You don't own NVIDIA for the dividend, for their 1 cent, 2 cent dividend. You owned it for the growth. That's why you own it. All right, so we got 7 more minutes of the earnings call. I'm going to start something.
It's not AI anymore. I think it's more of quantum.
What do you do with crypto with Bitcoin under 100K?
Fetal.
Like I just
So John, when you look at the cold storage, so
fetal position.
It's hot wallets, right? Where it's accessible, it's on an exchange, it's in a wallet. There's a lot of transition into cold wallets because people are worried about getting hacked. That balancer hack took a lot of confidence out of Ethereum, a lot of confidence out of Bitcoin, and they've been hammered for the last 30 days. So one of two things are going to happen. Either right after Thanksgiving, this could last a little bit longer, right after Thanksgiving, they're going to rip, or the sell-off should stabilize. So I think we're past those days of watching an 80% decline. Hopefully in these cryptos. So I would look for December to be a rally month and get back to those all-time highs in both Bitcoin and Ethereum.
This dude already gave up. He already gave up on crypto. He's literally telling you that he thinks crypto is going to go down and he wants to get back in December. He does not have a crystal ball. No one has a crystal ball. Guys, don't try to play this game. Right? Like he obviously has lots of factors that he needs to worry about in his portfolio where he's managing it. But unless you're managing billions of dollars, I don't think this timing game is going to work. You clearly have seen Michael Burry fail. He openly admitted that he has not kept up with the market returns in his last tweet. Don't be this guy. Don't play this game, right? When it comes to crypto, just buy it and just hold it. Like, don't try to no one knows where the bottom is. The chart looks terrible, but like, I think Bitcoin's going to go to $1 million, but I don't think it's going to happen for a while.
Love how supportive crypto traders are of each other in the tough times. It's like the sideline of a football game. Come on, you can get back in there. Hold on for dear life. Steve Grasso, thank you. Everybody watch Fast Money right after this. Well, Bitcoin plunging nearly 20% since early October, hitting the lowest level since May today. But up next, Mike Santoli is going to look at why the cryptocurrency could be primed for a comeback. And the government shutdown might be over officially, but the data desert continues. We still won't get the latest producer price index, retail sales, and business inventories reports tomorrow, but you will get more overtime right after this break. Data to Buffett and quantum to quality, you can see the shift in market outperformance.
Robinhood had their earnings recently. I'm sorry, not Robinhood, Rocket Lab. And that is a nasty monthly candle on Rocket Lab. Guys, if you're bullish Rocket Lab, you better have conviction, okay? You better know you want to own this company long term, because this chart is headed to $36. I'm not saying wait till $36 and buy it. I'm just saying if you're buying here, be ready to buy more if it goes down more, okay? And that goes with any of these growth stocks. That goes, HIMS is at $36? Wow. That is brutal. That is brutal. Yeah, you better know you want to own this stock. I don't see a bottom anywhere. This is in no man's land. It hasn't been well below this 200-day moving average since, oh my goodness, 2023. You better know you want to own this company if you buy it. You seriously better. And BMNR, I'm sure Ethereum is going to turn out fine. But if I'm going to own Ethereum for the long term, I'm not going to own BMNR. I'm going to own Ethereum. Because BMNR is not Ethereum. They're going to have 5% and then they're going to stake, right? That's what they say their strategy is going to be. But no one knows if that's going to be the strategy. There is a lot more risk in that table than I think a lot of people who are in it are even accounting for. No one knows. No one knows how that's going to turn out. Just because it's got Tom Lee backing, it doesn't mean it's going to play out perfectly. It just means that he told you what his plan is, and you have to buy and pray that it's going to go back up. You know why? Because no one knows when Ethereum is going to go up, because you have to buy and pray when Ethereum goes up. What I can tell you is that I would rather own the hard asset with crypto than own a proxy company that's just accumulating treasury. I still have a small position in MSTY. Okay. This is the worst looking chart ever. And to be honest, I didn't buy it hoping to become a millionaire. I just want to have a little bit of exposure. I have like a basket of I have like a small basket of like 5 basis points, 10 basis points positions. But there was a point though where this was like a good company to like sell puts on. But that game is long gone. But if you look at the underlying of it, right? Where's Bitcoin at? Bitcoin is still up here. MicroStrategy is down here. These treasury stocks will go down harder than the underlying. So if you want to own it, know what you're getting into, okay? And no one can make that decision for you. Not even your favorite followers can make that decision for you. You need to make that decision for yourself, because when things collapse, which is what is happening right now, you need to know that you want to buy more. If you are worried that something might go down after you buy it, then you probably shouldn't buy it in the first place, okay? If I buy Amazon, I'm buying it knowing that one day it could be down here. It can. There's nothing in this world that says that Amazon can't be at $150. Like, no one can tell you that. If someone tells you that Amazon will never be $150, do not listen to them, because no one could have told you that Amazon was be $150 up here. No one would have told you that, Because if they did, they'd be a genius. They'd have a fortune ball. They'd have a fortune. They'd be a fortune teller. But no one can tell you that. I don't think I'm going to be in the IWTB anymore. We're taking a little bit of a hiatus on that right now. So for now, it's the show's just taking a break. But I'm going to be here for you guys, so that's going to be cool. All right. So we have the NuBank conference call. I'm going to go ahead and set this up. I keep talking. This guy just keeps talking. Why do I listen to this guy? Why do I talk to them? Why do I listen to this guy? Anyways, I'm just messing around. I'm just like chatting it up right now because I am trying to open up the NuBank conference. I had that thing open a second ago. Why can't I find it? Ugh. I bet you that. Here we go. I got it. I am going to unshare this screen first. By the way, guys, all 26 of you that are on here, appreciate you guys being on here. Really do. Really do. It's cool to hang out. We all like NuBank. We all want NuBank to go up. I will buy more NuBank if it goes down more. I will tell you that right now. I will be buying more NuBank if it begins a downtrend again. I will slowly buy that thing. And that will be with net new capital. It is a company that I will buy as it's going down, not chase as it's going up. All right. Okay, they started. Let me share it. Hold on.
Mr. Soto, you may proceed.
Thank you, operator, and thank you everyone for joining the earnings call today. If you have not seen the earnings release already, a copy is posted in the Investor Relations website. With me on today's call are David Vélez, our founder, Chief Executive Officer and Chairman, and Guilherme Lago, our Chief Financial Officer. Throughout this conference call, we'll be presenting non-IFRS financial information, including adjusted net income. These are important financial measures for Nu Holdings, but are not financial measures as defined by IFRS, and may not be comparable to similar measures from other companies. Reconciliations of the non-IFRS to the IFRS financial information are available in the earnings press release. Unless noted otherwise, all growth rates are on a year-over-year FX neutral basis. I would also like to remind everyone that today's discussion might include forward-looking statements, which are not guarantees of future performance, and therefore you should not put undue reliance on them. These statements are subject to numerous risks and uncertainties, and could cause actual results to differ materially from our expectations. Please refer to the forward-looking statements disclosure in the earnings release. I will now turn the call over to David. Please go ahead, David.
Hello, everyone, and thank you for joining us today. In Q3 2025, effectively every single one of our metrics continued to grow, reinforcing our position as the leading digital bank in Latin America and one of the leading fintech platforms globally. Our customer base grew to 127 million customers, with more than 4 million net additions in the quarter, while maintaining an activity rate above 83%. A clear reflection of the depth of engagement we continue to build with our users. In Mexico, we surpassed 13 million customers, now reaching around 14% of the adult population, and in Colombia, we're approaching 4 million customers. Both markets continue to demonstrate strong traction, highlighting the scalability of our model. This solid growth, combined with continued ARPAC expansion, which surpassed $13 this quarter, has led to record revenues of over $4 billion. These results highlight the compounding effect of our customer expansion deeper engagement, and disciplined monetization. Our gross profit continues to rise sharply, reflecting strong unit economics and operating leverage. And with a cost-to-income ratio of 28%, we continue to progress on our trajectory of improving efficiency. And finally, we delivered net income of $783 million, another quarter of solid profitability, even as we keep investing in growth and innovation across all markets. This consistent performance is a direct result of our business model, one that attracts millions of new customers every quarter, fosters deeper engagement that expands monetization, all while operating on a low-cost and highly efficient platform. This formula continues to drive our earnings growth across markets, but with each component playing a distinct role in every geography. In Brazil, we now serve over 60% of the adult population and estimate that we're already the largest player in the SME segment by number of accounts. Having reached scale, revenue per customer has become the main growth driver. Our focus going forward is on broadening our product portfolio, deepening engagement across all segments, and continuing to execute our credit strategy, increasing exposure among customers with the strongest risk-adjusted returns. In Mexico, our main focus remains on expanding our customer base, deepening product adoption, and advancing financial inclusion, all while laying the groundwork for sustainable long-term monetization. Even in this scale-up phase, RPAC levels are already nearing those seen in Brazil, reflecting the strong unit economics of the credit card business in that market, driven by a higher share of interest-bearing balances and a steadily declining cost to serve supported by our ongoing platformization efforts. Both markets demonstrate the strength and adaptability of our model, which is capable of driving rapid growth and scale in earlier stages, while expanding profitability as market matures. Diving deeper into Mexico, our second S-curve, we see a market now beginning to scale, and one that we expect will contribute meaningfully to our results in the years ahead. We're building strong foundations, having reached market leadership position in the Mexican digital banking space, already reaching 13 million customers, or around the 14% of the adult population, compared with about 10% when Brazil entered its inflection point back in 2019. Even with a product portfolio still largely centered on the credit card, RPAC has already reached $12.5, reflecting strong customer engagement and the favorable unit economics of this product in Mexico. On the cost side, cost to serve is already below $1, and recent adjustments to deposit yields are beginning to flow through our cost of funding. Looking ahead, we'll continue stacking new S-curves with focus and discipline. While Brazil and Mexico remain our core priorities, where most of our resources and execution efforts are directed, we also see transformational optionality in the US, following our filing for a national bank charter, a step that could unlock new opportunities over time as we remain fully focused on our core markets. As we continue scaling across markets, we're also building the next generation of our platform, redefining how we operate and how customers experience banking. We have heard several investors asking us about our AI strategy, and so we wanted to spend a few minutes on it. Our vision is to become AI first, which means integrating foundation models deeply into our operations to drive an AI-native interface to banking, while creating meaningful benefits for both our customers and our business. For our customers, AI is enhancing our understanding of each individual and their financial needs, allowing us to deliver personalized recommendations, contextual offers, and products, and proactive insights at the right moment. It will also transform the way people interact with NuBank, be it through a simpler and seamless app or through a number of additional channels embedding conversational user interfaces. We think there is a significant opportunity to include agentic workflows across most products and services, improving customer experiences across the board. For our business, AI is strengthening how we manage risk and scale efficiently. It is helping us to design safer and more precise financial solutions, reducing credit and fraud losses, and enabling tailored collection strategies that drive better recoveries. At the same time, it is enhancing productivity across the company, from leaner operations to faster development cycles and higher engineering throughput. When we bring all of this together, becoming AI first means accelerating our flywheel by scaling to offer higher quality products at lower costs, unlocking the full value of open finance, deepening cross-sell and product penetration, and opening new revenue streams, all while optimizing pricing and delivering superior value for both customers and shareholders. But AI is not a buzzword for us. We believe NuBank is uniquely positioned to become AI first and a leader in the use of AI in financial services globally, and we're already starting to see the first breakthroughs. Since our early days, we've known that technology and data would be our strongest competitive advantage. Being cloud native and built entirely on modern architecture enables us to simulate, experiment, train, and deploy foundation models at scale. Coupled with our proven ability to attract world-class talent, this puts us ahead of incumbent banks and regional fintech competitors and places us in a unique position globally. Over the past 12 to 15 months, we developed NuFormer, or a proprietary approach for building large, generalizable models based on advanced transformer architectures and self-supervised learning principles, similar to those powering world-class LLMs. These models provide a deeper understanding of customer behaviors and can be deployed across our critical risk and personalization engines. To reach this level of performance, the first generation of our NuFormer model was built with 330 million parameters and trained on approximately 600 billion tokens, an unprecedented scale of data by financial industry standards. Yet that represents only a fraction of our full dataset, which spans trillions of tokens and reflects the vast scale and diversity of NuBank's platform. Our business model, with principality at its core, generates a deep repository of high-quality transactional and behavioral data, giving us a distinctive edge by enabling NuFormer to learn from richer context and continuously strengthen its predictive power. Historically, gains in credit performance have come from our main fronts: incorporating more and better data sources into models, expanding training samples or reducing bias within them, optimizing policy frameworks, including the use of complementary models that evaluate different dimensions of credit risk, and finally, refining modeling techniques, from definition of targets to model architecture and feature engineering. The adoption of foundation models represents a radical expansion of this last frontier. It brings a research-driven approach that moves the needle through advances in model architecture and training processes, enabling rapid and continuous improvement as AI researchers push the boundaries of what's possible. When we apply this approach, the models we build deliver an average improvement about 3 times higher than what's typically observed in successful machine learning model upgrades. Translating these into business outcomes, our initial models enable a major upgrade to credit card limit policies in Brazil, allowing us to meaningfully increase limits for eligible customers while maintaining the same overall risk appetite. This successful breakthrough within an already robust underwriting model, like Credit Card Brazil, underscores the significant potential of these advanced approaches. We're now focused on scaling these innovations beyond Brazil, already in motion in Mexico, and extending them across every part of NuBank, from personalization and cross-sell to fraud and collections, further reinforcing both the strength of our model and our ability to execute at scale. That said, we're still just scratching the surface. As always at NuBank, it's still day one, but we believe that embedding AI into our business represents a once-in-a-lifetime opportunity to further differentiate NuBank from traditional banks. We're building on years of experience in model governance, privacy, and large-scale model deployment to ensure we continue evolving responsibly. This means having robust processes that make sure our tools truly promote our customers' financial well-being, with the right guardrails in place to bring these advanced models safely into production within a highly regulated environment. We'll continue to share our progress as this journey evolves. And with that, I'll hand it over to Lago, our CFO, to walk you through the financial highlights of the quarter. Thanks a lot.
Thank you, Davi, and good evening, everyone. To begin, I'd like to start with our credit portfolio. Total balances reached $30.4 billion in the third quarter, up 42% year over year on an FX-neutral basis, with very solid growth across all products. Credit cards accelerated during the quarter, supported by our ability to continuously enhance the precision of our credit models and increase limits for our customers, all while maintaining very healthy risk metrics, as we will see in the following slides. At the same time, secure lending grew 133% and unsecured loans 63% year over year, reflecting the ongoing diversification and maturation of our portfolio. Together, secured and unsecured loans now account for nearly 35% of total balances, up from 27% a year ago. This reinforces our capacity to broaden the credit spectrum and serve a wider range of customers' needs over time. Moving to loan originations, we reached a record high of $4.2 billion in the quarter, up 40% year over year on an FX neutral basis, with growth coming from both unsecured and secure lending. In unsecured lending, performance was supported by the strong momentum in our SME portfolio and by new credit policies introduced for both business and individual customers. These updates are enabling us to safely expand eligibility and increase average loan sizes while keeping new originations more concentrated in lower risk segments. In secure lending, results were driven by strong originations in public payroll loans, or consignado, which grew nearly 130% year over year, along with a gradual normalization of INSS loans. Now turning to deposits, our balances reached $38.8 billion, up 34% year over year on an FX neutral basis, while the cost of funding actually improved from 91% to 89% of interbank rates. This is a clear demonstration of our ability to grow volumes while enhancing efficiency, continue to build a scalable and sustainable funding franchise across Latin America. In Colombia, deposits continue to grow steadily, even with funding costs below the interbank rate. In Brazil, we saw strong inflows across all segments, reinforcing the depth and the resilience of our deposit franchise. And in Mexico, we had anticipated some outflows following the recent reduction in deposit yields. This was a deliberate move that reduced our consolidated funding cost, and this was fully aligned with both our expectations and our long-term strategy for sustainable growth. Recent trends in Mexico reinforce our confidence in our ability to continue expanding and strengthening our deposits franchise. Moving to net interest income, we reached $2.3 billion in the quarter, up 32% year over year on an FX neutral basis, driven again by the continued expansion of our credit portfolio. Net interest margins contracted by about 40 basis points from the prior quarter. This reflects our disciplined approach to optimizing risk-adjusted returns as we continue to expand originations in lower risk segments, including in credit card interest-earning portfolios, unsecured loans, also to lower risk individuals, and a higher shares of SME and secure loans within our total interest-earning portfolio. While some of these products carry lower nominal yields, they strengthen the portfolio's overall quality and resilience over time, as you can see in the next slide. Our credit portfolio continues to outperform our expectations, supported by disciplined underwriting and a healthy mix shift towards customers and products with stronger risk-adjusted returns. Combined with better recoveries, these factors drove a 7% decline in credit loss allowance expenses quarter over quarter, also on an FX neutral basis, mainly reflecting lower provisions in our two largest products, namely credit cards and unsecured loans. As a result of this lower cost of credit, our risk-adjusted net interest margins expanded to 9.9% in the quarter, underscoring the resilience and the quality of our portfolio. Next, looking at delinquency metrics for our consumer credit portfolio in Brazil. The 15 to 90-day NPL ratio remained well within expectations, ending the quarter at 4.2%, slightly below the historical third quarter seasonality. The 90-plus day NPL ratio increased marginally to 6.8%, also very much in line with the expected seasonality and the underlying portfolio dynamics. Now, finally, our coverage ratios remained solid, even though they declined modestly in line with the recent movements in credit loss allowance. We continue to maintain what we believe to be a quite robust provision buffer, both over the total portfolio and specifically over the 90-plus day NPL balances. Moving to gross profit, we delivered another quarter of solid growth, reaching $1.8 billion, up 32% year over year, also on an FX neutral basis. The expansion in gross profit margin, now to 43.5%, reflects the consistent top-line growth combined with the continued improvement in the risk-adjusted performance that we saw in the prior slide. These trends reinforce the sustainability and the scalability of our business model as we continue to balance growth, profitability, and risk discipline across the three markets in which we operate. In the third quarter, our efficiency ratio decreased slightly to 27.7%, reflecting continued progress in productivity and operating leverage. Yet, we will continue to invest intentionally and strategically to become the largest and the most loved retail financial institution in Latin America. These investments are fully aligned with our long-term value creation strategy, even if they sometimes create short-term pressures on costs. That all said, the structural trend remains clear. As we scale, revenue growth and disciplined cost management will continue to drive efficiency gains and margins expansion. Now, to wrap up, we delivered a record high net income of $783 million and a record ROE of 31%, up 39% year over year, also on an FX neutral basis. We achieved these results while continue to deliver strong operational growth, always putting our customer at the very center of everything that we do, offering better products, lower fees, and an exceptional experience. These results once again highlight the strength and the scalability of our model, as well as our ability to combine growth with profitability. Now, with that, we will open the call for questions. Thank you.
We will now start the Q&A session for investors and analysts. If you wish to ask a question, please click on Raise Your Hand. If your question is answered, you can exit the queue by clicking on Put Your Hand Down. Please limit yourself to one question and a follow-up. If you have further questions, please re-enter the queue. You may submit online questions at any time today using the Q&A box on the webcast. I would now like to turn the call over to Mr. Guilherme Souto, Investor Relations Officer.
Thank you, operator. Could you please open the line for Mr. Yuri Fernandes from JP Morgan?
Thank you, Souto. Hi, Davi. Hi, Lago. Congrats on delivering. I think that the debate from investors here, and I would love to hear your thoughts, is going to be related to your provisions, Lago. Your cost of risk was lower. I think you are doing a risk migration, right? Growing more middle income in Brazil, growing more secured lending. When we check your new stage 3 formation improved. But I guess investors, they will try to understand the lower provisions this quarter that helped on the bit. So if you can provide some explanation for investors to understand what drove these lower provisions, I think this will help with the understanding for the quarter. Thank you very much, and congrats again.
No, thanks, Yuri, for the question. Yes, I think asset quality has been a positive over the past 2 quarters. I think this quarter we have also seen kind of asset quality performing as per expectation, even is slightly better than expectations. We have also had some effects of the policies that we have intensified over the past now 3 to 4 quarters of reactivating customers in Brazil who had defaulted with us a few years ago, and only now, after they have cured their debt, we are also kind of offering them additional credit opportunity that has materially improved the recovery levels. And then finally, we actually have seen through both machine learning, but also the predictive AI technology and modeling that Davi alluded, the ability to actually have greater precision in some of the credit modeling techniques. So what you have seen is kind of asset quality performing in line or even better, but still, if I would now draw your attention, Yuri, to, let me go here, slide 17, you see that the coverage ratio that we continue to have are at levels that we believe to be fairly robust in both the total balance as well as NPL 90 plus. So now let's see how it goes, but we are also kind of in the mid of the fourth quarter of 2024 now, like it's November 13, and we continue to see asset quality performing relatively okay. So that's kind of the main background for the evolution of our CLA this quarter.
No, super clear, Lago. Thank you and congrats again.
Thanks, Yuri.
Operator, could you please open the line for Mr. Jorge Kuri from Morgan Stanley? Okay, let's move on. Operator, could you please? Okay, hi Jorge.
Sorry. Hi, sorry about that. Good afternoon, everyone. So congrats on the numbers. Great results. My question is around your net interest margin. I heard what Lago said about the mix of credit being responsible for the decline in NIM. I'm looking at just the nominal numbers, and your interest income was up 14% quarter on quarter, versus a loan book in total that was up 11%. So it doesn't seem that you're growing your income less than the assets, which would be sort of like a signal of a mixed deterioration. It's actually the other way around. But on the flip side, your interest expense was up 24% quarter on quarter versus your deposits up 6%. And so you talked about the cost of deposit coming down, but it's just in dollar numbers, it kind of like doesn't add up. And so I'm just wondering if you can walk us through these dynamics and exactly what explains that NIM contraction.
Sure, Jorge. Look, two things on this. So first on the revenue and then on the cost. I think on the revenue side, we have seen the growth being kind of more heavily weighted into less risky assets. Not only asset classes per se. For example, you can see that if you go to slide 12, you can see that, for example, secure lending has outpaced the rest of the portfolio. Secured assets has everything else constant, lower kind of yield levels. But even within lending and within credit card, Jorge, we are seeing kind of a faster growth on a balanced basis towards less risky customers that would have all else equal kind of lower yields. So that is one of the things that would justify. But you pointed out that we have also seen an increase in interest expenses, and that has come entirely from Brazil. So our average funding cost in Brazil has gone up, and the average funding cost in Mexico and Colombia have been coming down. When we look at the average funding cost that we published on slide 14, you will see kind of the what we call the cost of deposits as a percentage of the interbank rate going from 91 to 89. And then may call the question, why? How do I kind of connect the dots, right? If you are lowering the cost of funding as a percent expressed as a percentage of interbank rates, how can your cost of funding expressed in dollars be going up? It's because the piece that is going up is the piece denominated in Brazilian reais, which is subject to the nominally higher interest rates of Selic of 15%. So the weighted average cost of funding expressed as a percentage of the interbank deposit rate, which is what you see here in slide 14, has come down, but the overall interest expenses dollar-wise has gone up a little bit. So the combination of lower asset yield because of the mix with a slightly more expensive funding base in Brazil has compressed net interest margins in the quarter, which is what you see on slide 15, that has gone from 17.7 to 17.3. What I would, however, point out is when you take into account the asset quality or the cost of risk, you actually see an expansion in margin. And that is what is shown on the subsequent slide, which is slide 16. Our risk-adjusted margin has actually gone up from 9.2% to 9.9%, which goes to show that even though we have kind of increased the growth towards less risky assets that has come at the expense of slightly lower asset yield, this has been more than offset by much lower cost of risk, which has led to the expansion of risk-adjusted NIMs.
All right, Lago, thank you very much. That was very clear. And if you don't mind my follow-up on the previous question on provisions, you mentioned recoveries stronger than expected. Would you mind quantifying that and what impact it had on the combined provision number?
We are not disclosing this one-off impact, Jorge. It's basically the additional of the recoveries, mostly from the customers that we reactivated over the past 3 quarters. This is a program that we have done by kind of offering a second chance to customers who defaulted to us a few years ago, have completely kind of paid down their debt, and then we have seen that out of those customers, the recovery has been higher than we had booked for. But we are not disclosing the exact breakdown of the additional recovery coming from this program.
All right, understood. Thanks again, and congrats on the numbers.
Operator, could you please open the line for Mr. Pedro Leduc from Itaú BBA?
Hello, good evening, everybody. Thank you for the call and taking the question. If I may, on credit cards, please. Last quarter, we saw a big increase in newly granted limits. This quarter, we may be seeing some of the effects here. There's more cards active, more cards generating revenues. Transaction volumes per card seem to be going up. Can you talk a little bit more about how you're seeing this rollout perform on the grounds? It looks like you did another small increase now in Q3. If you can talk about that as well. And I think it may tie up also to the what we're seeing in the stages and the probabilities. It seems like this growth is coming from slightly better quality mix. If you can also include that. I know it's a longer question, but I think you get the spirit. Thank you.
Sure, look, thanks for the question. So, look, we announced a relatively large credit limit increase program in the second quarter of 2025. And the rollout of that credit limit program was spread grossly 1/3 in the second quarter, 1/3 in the third quarter, and 1/3 expected to be finalized in the fourth quarter. So we have not yet seen the full effects of that CLIP program materializing in the financial performance of the company. It's something that we will only see in full, most likely towards the mid and end of 2026, because it takes some time for limits to converge into PV and for PVs to converge into IBB. So there's some leeway there as well. Second point, Leduc, you're right. I think a substantial portion of the credit limit was granted to less risky customers. So kind of the average unit of risk that we have added has actually lowered over time. However, as we increase the limits to kind of lower risk customers, we also decrease the flip side, the utilization, right? So I think if you have 1,000 reais limits and we increase this by 20%, you would experience much higher utilization than if you have 100,000 limits and we increase this by 10%. But both the utilization as well as the credit performance related to this credit limit increase have now both performed largely per our expectation. So nothing kind of that deviates or forces us to revisit, both on the offensive as well as on the defensive side, the pace and intensity of those movements. Now, even though we did disclose in the second quarter that we saw a big clip, a credit limit increase, I don't think we should see this as a one-off, right? This is really a continuous enhancement of the programs that will not be kind of a straight line, but we will see kind of a clip programs being introduced from time to time. That's what we've seen over the past years. And then if you go, Leduc, to what Davi mentioned at the beginning of his session about the implications of the predictive AI modelings to our credit underwriting, I would say that first we have introduced this to credit limit increases that has not yet been introduced to releases, by which I mean we have been able to sharpen how we increase credit limits of existing customers. We have not yet applied this to the determination of the new customers to which we granted the initial line, which we call customer acquisition. We have also not introduced this to lending, and we have not introduced this to Mexico and Colombia. So I think there's still quite a lot of runway for us to see further improvements and enhancements in our credit underwriting performance.
Thank you very much. Congrats.
Operator, could you please open the line for Mr. Mario Pierre from Bank of America?
Hey guys, good evening. Congrats on the results. Let me double click a little bit on Mexico and Mexico RPAC of $12.50 that you're showing, and which is a quite impressive number, right? Especially given that Mexico is fairly new for you and the RPAC is almost similar to Brazil. Can you give us like a little bit more details on the breakdown of this RPAC between interest, income, and fees? Because, and I asked this, right, because we saw the regulator in Mexico now proposing a cap on card interchange fees. So I was wondering, what is your view on that, and how much that could impact your results in Mexico? Also, staying with Mexico, you only give us data, right? The NPL data and coverage data for Brazil operations only. I was wondering if you could share any asset quality metrics from Mexico. That'll be helpful. Thank you.
Sure, Mario. Let me try to address each of those questions, and feel free to follow up if I miss any of them. So I think on Mexico, you've mentioned about the evolution of the customer and RPAC and cost to serve. And I would draw your and the attention of the others to slide 7, where you can see the evolution of our customers in Mexico. It's now about 13 million customers, accounts for grossly 14-15% of the adult population of Mexico, but accounting for nearly 25% of the banked population in Mexico. So we can easily say now that about 1 out of every 4 banked Mexicans are customers of NuBank, which makes us quite excited. And then, as you said, you see kind of the RPAC evolution in Mexico. Most of them are kind of interest related, both from credit card lending and floating from our deposit based. The fees, the interchange related to both credit cards and to debit cards accounts for a smaller portion of the overall RPAC. That said, Mario, I think you alluded to the public consultation that the Mexican government has recently issued, aimed at capping the interchanges of both credit cards and debit cards in Mexico. We have, since this kind of came out, been in very active dialogue with other industry participants and with the government itself. And even though that accounts for the smaller portion of our revenues, we are concerned with the idea of caps and price controls there, because they may actually inhibit the financial inclusion and the credit deepening that we have seen in Brazil and other countries, as they make the unit economics of new to credit customers less compelling. So we are kind of in active discussions with all of the industry participants. We are very confident that kind of we will be able to find together as an industry to a good balance that will not put at risk our ability to promote, together with other fintechs, the financial inclusion in Mexico over time. Mario, did I forget any of your questions?
No, that's helpful. And then on the NPLs, and just to clarify, Lago, when you say, right, that the fees are a smaller percentage, are we talking about like 15%, 20%? Any idea? Any color you could give to us?
No, we don't provide this breakdown, but I think if you take a look at the financial statements that we post with the regulators in Mexico, you will largely get a good proxy of kind of the weight of each of those components for us. But I think even if they, Mario, for example, let's assume that interchange account for a small portion. If you cap this in the magnitude that has been proposed by the government, the existing kind of business plan that we have, a significant portion of the new customers, of the ones that we would bring from informality to the bank, may be compromised, right? So we do believe that it's our obligation and duty to be able to share this very openly with the stakeholders in Mexico to continue to foster the competition and financial inclusion that we want to do so.
Okay. And the second part of my question was on the NPLs in Mexico. As Mexico becomes more relevant, right? Like, are you going to disclose the NPLs for the total group rather than just Brazil? And if you can make any comments on how that is behaving in Mexico and the coverage that you're seeing?
Yeah. No, absolutely. We do expect that as Mexico gains relevance in our overall credit portfolio, we will start providing kind of a much more granular disclosure on its asset quality. Today, it still accounts for less than 10-15% of our overall book, but we are certainly ready, able, and willing to provide those levels of disclosure. Asset quality and asset performance in Mexico overall has been a fairly good story for us. I think we spent the good part of 2023 and 2024 kind of sharpening the data stacks and the models. And what you have seen over the past 12 to 18 months, it's a relatively strong acceleration of the growth of our credit book in Mexico, growing at a clip of about 50 to 70% on an annualized basis. But more than the top line growth or the size of the book, the asset quality has performed very much in line, in some cases even better than expected. Also, we have recently launched kind of the lending product in Mexico. We have been kind of working primarily with credit card, and lending has been doing really, really well in Mexico. I wouldn't be surprised if, differently from Brazil, at some point in time, lending becomes an even bigger business for us in Mexico than credit card. So I would say the left side of the balance sheet has expanded nicely in both kind of quantum and quality. And then on the right side of the balance sheet, as you may have seen, Mario, we have been kind of sequentially redesigning and repricing deposits. It has led to a fairly substantial drop in cost of funding in Mexico, and still preserving what we see very intensively there, which is primary banking relationship, transactionality, activation. So for most of the customers, it has actually been going up. We are in all-time high of transactionality there. So we're excited with Mexico, with what we're seeing. Still early days, but as David mentioned, it's playing out to be as strong, if not even stronger, than Brazil.
Thank you, Lago. Yeah, no, it's very impressive how quickly and how profitable you're growing in Mexico. Thank you.
Operator, could you please open the line for Mr. Marcelo Mizrahi from Bradesco BBI?
Hi, guys. Thank you very much for the opportunity to participate. So my question is regarding the cost of risk again. So I understand what drives the cost of risk to go down. But as Lago has said, so about a campaign to recovery, to bring back clients, so we are already seeing the number of active cards going up. So the question is, looking forward, this level of cost of risk seems that is the new level or in the next quarters. So the growth of the NIM will come with this proportionality. So for more from the cost of risk than from the net interest margin. Thank you.
Look, so thanks for the question. I think it will, in terms of NIMs, starting with the latter part of your question, it will be a function of both asset mix as well as LDR, right? So I think as we increase we continue to increase the ratio and the weight of secure lending in our book, we could eventually see the continuous lowering of the asset yield. But as LDRs go up, we should expect to see NIMs even expanding potentially. So it will depend on the velocity with which we increase our credit assets versus the velocity with which we continue to increase deposits in both Brazil, Mexico, and Colombia. In terms of cost of risk, we don't provide guidance on cost of risk in the short or in the long term. What we have been doing, as you have followed us for some time, is we have been measuring and managing the business with a paranoid focus on the short-term data that we collect on the margins. So far, the data has proven to be fairly encouraging and reassuring for us to continue to grow the book. However, as we have done in the past, if and when we see any deterioration in asset quality across any of the segments, any of the products, or any of the geos, we will not hesitate to to pull the brakes, reassess, revisit where we will go. So that's one of the reasons why we are so hesitant to provide guidance on both top line as well as cost of risk.
Can I just do a follow-up here on the LDR? So looking for the what is happening now in Mexico, so for me, it makes sense to see this a part of this profitability coming from the leverage of the portfolio. So on the LDR part, are you guys seeing that already or not?
Yeah, look, I think LDR in Mexico is about 15%, 15, right? So it's certainly in many respects one of the most liquid financial institutions that we may have in the region. Having said that, over the past 2 quarters, most of the expansion of NIMs in Mexico has come from the lowering of the cost of funding rather than any material changes in LDR. Going forward, however, I think that LDR will play a much bigger role than any material change in cost of funding.
Okay, thank you very much.
Operator, could you please open the line for Mr. Thiago Batista from UBS?
Hi, guys. Congratulations for the results. I have one question, actually, one question divided in 2 about regulation. The first part of the question is about mortgage. With the recent change in regulation on saving deposits and mortgage in Brazil, do you believe it's possible to start to operate in this market in the near future? And second, on the FGTS loans, with the change that we saw probably 1 month ago or less than that, do you believe that FGTS loans will be reduced in material way?
Thank you for your question. So we've looked at the mortgage space in Brazil, and certainly there are a number of attractive angles, specifically around principality.
You don't get that
but
type of
it's not a priority for us right now. It's not a product that I see ourselves really doing over the next couple of years. The main reason for that is we think about our balance sheet fundamentally as a small balance sheet that is well capitalized, that has very high velocity and very high return on equity. So from that perspective, we're going to be picking products, especially credit products, that have short duration, very data intensive, that gives us the opportunity to react very quickly to changing macroeconomic environments, and that it gives us a lot of agility And obviously mortgages is kind of the opposite of that. It's very long-term duration, removes a lot of agility, requires a lot of long-term funding. So it doesn't really match with the type of products that we want to be offering directly from the balance sheet. And perhaps down the road, there might be an opportunity to partner with somebody to actually do it, but it's not something that we'll be prioritizing right now. On FGTS regulation, yes, I think the regulation would have a decrease of our FGTS originations. But given the size of the portfolio and the rest of the lending products that we offer, it wouldn't really be material. So yes, effect on FGTS, but not really a material effect overall on the portfolio growth.
Very clear, David.
Thank you.
Operator, could you please open the line for Mr. Gustavo Schroden from Citi?
Hi, guys. Congrats on the results. Thanks for the call. Most of my questions were answered, so let me do a follow-up here. The first one is I'd like to understand better this the asset quality. Indeed, the beat was on the lower ECL. So despite this, some metrics like 90 days NPLs relatively stable and early NPLs improving, when we analyze the transfers to stage 3 in both credit cards and loans, it is continuing increasing, right? It's rising. So I'd like to understand how we reconcile this increase in transfers to stage 3 with this, let's say, a lower risk credit portfolio you are adopting and these lower provision expenses in the quarter. Thank you.
Yeah, Gustavo, thanks for the question. Look, we've been, I think, other than what we've already mentioned related to the better than expected asset quality performance in some of the segments, especially with credit cards Brazil. I think the other positive surprise, I wouldn't say surprise, I mean, the positive outcome that we have had after kind of many months and years of investment is also on the ability to improve our collections engines and platforms, which has had kind of material improvements in Brazil. And I think it will start to have material improvements in Mexico, most likely starting in the fourth quarter of 2025. But other than that, it's just kind of a general performance of the portfolio. There's nothing atypical or nothing abnormal that you would have seen over the past 2 to 3 quarters that we wouldn't expect to continue seeing in the next 2 to 3 quarters, unless we see kind of material changes in macro.
Okay, understood. And my follow-up would be regarding Mexico. Assuming this, let's say, improving in cost of funding, we follow data from Mexico, and we can see that you are improving the cost of funding there. Assuming a potential improvement also in loan to deposit ratio, and we also follow the NPL ratio, and we see NPL ratio in Mexico under control. So do you think that assuming these trends you are posting in Mexico, we can expect like some positive ROE or bottom line in Mexico soon?
So sure, then I wouldn't guide in any way or form, as we haven't done in the past, on kind of the P&L or net income, either for the company or for any of the legal entities. So I would stay away from trying to.
Hey guys, just to let you know, I'm gonna have to end this soon because I'm gonna have to go out. But probably gonna play it for another few more seconds for the remainder of the question, and then kind of give my summary and then close this out. All right.
It posts actually unit economics that are as compelling, if not more compelling, than Brazil's. It has higher ROA, it has higher ROE, and allows us to actually provide kind of with material credit access to a portion of the population that hasn't yet had no access to credit. If you take a look at the more than 13, now almost 14 million customers in Mexico, about 20% of those do not have access to kind of a banking or credit before joining NuBank. And we think that in Mexico, we enjoy a very favorable cost structure compared with many of the other players in the region that allows NuBank to play at segments that incumbent banks are unable or unwilling to play, to price it lower and still have compelling kind of unit economics. And we are super excited with what lies ahead in Mexico. We are still very, very, very early. But as we continue to gain scale, we will see kind of economies of scale and operational leverage playing out there. In fact, today, Mexico already has a cost to serve that is about $1, which is much better than what Brazil had when it was at the same point in time of development of Mexico. And it already has kind of very encouraging ROEs and ROAs trends. Big question in Mexico become how fast the economy will truly digitalize, and how much kind of banking penetration will grow. We are excited not only to witness this, but also to be a very active agent in promoting this together with other players in the industry and with the Mexican government.
Lago, the other point I would just add here is that if we wanted to be profitable in Mexico, we would be profitable already. It's a decision. We literally touch a button, make a decision, and we're profitable.
All right. So interesting. I had CNBC rolling up. Looks like China tried to use Claude to hack. But all right, gonna be ending this soon. So what did I think about the earnings call? I mean, it really is a summary of what we saw in the actual earnings itself. They did get some clarity as far as the contraction in net interest margins, which went from 7.7 to 7.3% quarter over quarter. And they attributed it to that basically by offering lower yield credit loans. And basically, it's a way to balance credit risk. So when you offer loans to people with lower credit, you basically get a higher return. They get a higher return because the money that they're borrowing, or the interest rate they're paying, the people to put the money in the bank and then turning around to loan that money out to lower credit people is actually higher margin for them. But I assume because the NPL or non-performing loans did tick up last quarter, they wanted to start offering loans to people with better credit, or likely people who are less risk to them. And that in itself is going to decrease the amount of interest income they earn from people. It didn't sound like they're going to stop that anytime soon, because it looks like from their earnings report that their non-performing loans has been increasing on a pretty decent trend lately, the 90-day plus. And I'll probably summarize this and send this out to you guys. Actually, more, I'm going to send this out probably to Chris's Patreon and the subs on Twitter. But with that being said, I mean, the stock is up. I think it's, last time I checked, it's up. It's up 3.5% after hours. It's basically where it started out today. So we'll see how this turns out tomorrow, guys. As far as the whole market goes, I mean, we're probably going to get bounced tomorrow. From there, we'll see where we go. I mean, we still are defending the 50-day moving average and SPY and Qs. IWN's below. Hold on a second. I wanted to answer this question real quick, so I keep on getting the questions on Nebius. Sam, since there isn't a chain of fundamentals, I think Nebius will be back by the end of the year. So the problem is that I don't have any power in terms of the price of the market. I just have power in terms of what I'm buying my portfolio, what I'm holding, and so on. Whether Nebius is going to be up by the end of the year really depends on the market. If we have a Santa Claus rally, then it's likely it'll be up by the end of the year. And if we don't, then it's probably going to be down. I think it really is in the mercy of macro when it comes to high growth stocks. And we should understand that coming in, that nothing ever goes in a straight line going up. Will I add more here? I already did add a little bit this morning. And if it go down further, I'll probably add more. But it's not a situation where I'm going to load the boat because I already built my position. So again, with the NuBank earnings, I think the earnings are pretty solid. The net interest margin, Wall Street, I'm surprised isn't killing them for it as far as after hours action, but we'll see what happens tomorrow. I think that the story is still intact with NuBank. You were hearing David Velez, the CEO, basically saying that they could be profitable with Mexico if they want to. It's just that they're trying to rapidly grow there. So that's going to hit them with more operating expenses and therefore going to take the operating income from Mexico down. But when you're growing at about, I think it was about 57% in Mexico, you're going to have to pay for that, right? But I think over time, it's going to pay a lot of dividends for them and to a lot of shareholders. Will I be increasing my NuBank shares? We'll see. We'll see how it pans out tomorrow. But this is one of the companies on my list that I do want to add to if the market continues to go down further. Nebius and Iran, those positions are built out for the most part. So if it goes down further, I don't know. We'll see what I'm going to be doing with that one. But there's a few other positions I'd like to add to. I like to add more to NuBank, like I mentioned. I like to add more to. Can't really think of the names off the top of my list. I like to add more to Meta, but when the market pulls back like this, a lot of good deals do pop up, and those are the ones where I prefer to add. And Meta's already, I think, like a 3 to 4% position for me, so I'm okay leaving that the way it is. And I think that's about it, guys. Really enjoy you guys for tuning in after our sticking around for the homie OGs that stuck around during the whole stream, the earnings call. I mean, these earnings calls for most of these companies are so boring for a lot of people. And I usually multitask during it, but I listen for certain commentary during it. Like I'm not a Wall Street analyst where I'm going to be like, ooh, let me listen to every single word. I wait for the transcript to come out. When the transcript comes out, then that'll give me more detail and I don't have to like rewind or anything. I'll just read through the transcript for the parts that I remember. And then I come up with my thesis after that. This is certainly not a thesis. This is actually a thesis solidifier for NuBank. And I would like to add more to it. Thing is that I think there's some other opportunity in the market right now that I do want to make those positions whole. And then I think with NuBank, that's a multi-year position. I'm going to continue to hold my base position right now, which is like 2% of the portfolio in shares. And I'll probably continue adding if we get below like $14.50 or $15. And if we bounce tomorrow, it's likely not going to happen. I'm okay with that. The other positions will likely go up more because they're much more higher beta. But of course, if we go down, it'll go down more. So that's the trade-off that we take in constructing a portfolio. So that being said, appreciate you guys for tuning in. This is quite a long stream, 2.5 hours. And hopefully we get a good bounce tomorrow and a great way to enter the weekend.